If you're starting late with investing, this one idea can save you years. The number one mistake late investors make isn't picking the wrong ETF or missing the perfect entry point. It's building a plan that looks good on paper, but falls apart the moment the market gets uncomfortable. Late investors don't lose the game because they didn't find the best investment. They lose it because they abandon their strategy at the worst possible time. That's why on this channel we start with protection first. Protection doesn't mean fear. It means durability. It means building an approach you can stick with even during drawdowns, scary headlines, and weeks where everything feels uncertain. Before we go further, quick note. This is educational content only, not financial advice. I'm not a financial advisor. Always do your own research before making investment decisions. Now let's break down what protection really means and why it matters more when you're starting late. When you start early, you can survive a big mistake. You have time to recover and time to learn. When you start later, the same mistake costs more, not just financially, but emotionally. A large drawdown can trigger panic, and panic creates the worst kind of loss. The kind that comes from selling low, stopping contributions, or jumping into a new strategy because you feel behind. That's the real risk, not the market. Behavior. Protection-first investing is a way of designing around that reality. So here's the simple definition. Protection is a plan you can live with, a plan you can hold through volatility, a plan that doesn't make you check the market every hour. If your strategy makes you anxious, it's too aggressive for your current stage. And for late investors, the goal isn't to prove bravery. The goal is to stay invested long enough for compounding to work. So how do you build protection? You start by reducing the number of ways your plan can break. One common way plans break is when they're too complex. Too many funds, too many rules, too many moving parts. Complexity feels sophisticated, but it often creates hesitation. And hesitation leads to inconsistency. Another way plans break is when the portfolio risk doesn't match your real life. People can say they're comfortable with risk until they see a real downturn. Then they realize they weren't ready for that feeling. Protection means being honest about that. It means choosing a level of risk that lets you keep your contributions steady, even when headlines are loud. Another part of protection is clarity. Late investors need clarity because clarity creates confidence. Confidence prevents panic. Clarity means you know why you own what you own and what you expect to happen in both good and bad markets. You're not surprised by normal market dips. You're prepared for them. And here's a key idea most people miss. Protection is not a one-time decision. It's a system. A repeatable set of rules you can follow when emotions rise. For example, having a simple allocation you understand, contributing consistently, and not changing your plan based on short-term market movement. That's protection. It's also knowing what you will not do. You will not chase hot trends. You will not try to make it back fast. You will not jump in and out of the market. Late investors don't need a heroic strategy. They need a survivable strategy. Because once protection is in place, everything becomes easier. Simplicity becomes possible. Consistency becomes possible. And growth becomes a byproduct of staying invested, not something you chase daily. This is why I call protection the first priority. If you skip protection and go straight to growth, you might get lucky for a while, but eventually markets test everyone. When that test comes, the question isn't, did you pick the best fund? The question is, can you stick to your plan? If the answer is yes, you win over time. If the answer is no, you restart over and over again, and that's where years disappear. So if you're starting late, don't ask, what's the fastest strategy? Ask, what's the strategy I can keep even in a downturn? That's the late investor advantage. Protection first, then simplicity, then growth layered on top of a foundation that doesn't collapse under stress. If you build that foundation now, you don't need to catch up overnight. You just need to stay consistent long enough for time to do its quiet work.